Hey, this is Mike Swanson. I run the website WallStreetWindow.com, and today I want to talk with you about the silver market and what's going on with it. Because last week we saw what looks like a double top. So let me turn to uh, this update that I'm putting out via email. This is my free newsletter. You can get it by going to WallStreetWindow.com if you're not already a subscriber. But here you see the price of silver, and it's had a tremendous run this year. In fact, it's had a tremendous run since the spring of 2024. You can go back and look at my YouTube videos that I was doing back then when silver was below $26 an ounce. And I was banging the drum on that breakout and saying, now's the time to buy before it breaks through $26. Then it cleared $26. I've stopped doing YouTube videos for quite a while because I really didn't have nothing to say. The move I was talking about happened, and it's still continuing. But this year, silver opened the year around $30 and ran all the way up to $54 in October. Made a high not seen in since really 13 years. And then it pulled back to the 50-day moving average. And last week it jumped back up, but on Friday it fell 3.44%. A lot of people are calling that out as a double top. And that's happening in the context of what is a pullback going on across the financial markets. The media has been paying attention on NVIDIA and the so-called AI stocks and the NASDAQ, but the pullback is really happening in everything. And I see it as a dip, a correction overall in the markets, and not the final top of the stock market here. But the silver and gold trend is actually more bullish this year. They're both up more than the S&P 500, and I think they've got room to go up even more in the years to come for all kinds of fundamental reasons. But this update's not about that. This update is about the technical price action, and there is no doubt that last week saw a double top, and I would not be shocked if silver doesn't dip again to the 50-day moving average. Now, of course, silver and gold have a close trading relationship together, and gold also popped up a little bit and came back down on Friday. It didn't go back up to the October high, but it's also around its 50-day moving average. And if you look at it, though, gold has also had a tremendous run this year, from around $2,600 an ounce to $4,400 an ounce. Now, notice in the first part of the year, it ran up to just around 3,500 in April, and then it went sideways for months, 1, 2, 3, 4, 5 months into really Labor Day, trading in a very narrow range. And when you see a market go up, like gold has gone up, you're going to see pauses in periods of consolidation. The same thing goes with silver, and I think that's really what is going on in these markets: a pause, a consolidation that is likely to last into next year, maybe end sometime in the spring. But I would note that the 200-day moving average for gold is very slowly trending up, and it'll get to the 50-day moving average where it is right now, around 3,900 by late February or March. And that would be if gold ends up going sideways and hitting that indicator next year, it would be a great buy the dip opportunity, because frankly, those retests of that major indicator, that support indicator, tends to be great buy points in bull markets. But is this a bull market or the top? Now, I want to tell you that my favorite indicator to answer that question, it remains bullish, and that is the GDX divided by GLD ratio. GDX is a gold stock exchange traded fund. GLD is an ETF for gold. By dividing the price of GDX by gold, you create a ratio that helps us measure whether GDX is outperforming gold or gold is outperforming GDX. That's important because in bear markets for gold, the GDX tends to fall more than gold. And at the start of corrections, GDX tends to peak out before gold does, before silver does, dip. So it underperforms at first. And then as the correction nears its end in terms of price, that ratio tends to stabilize and firm up. And that's exactly what it's been doing. Here is the ratio right here. You can see it peaked out very late October, almost 2 weeks before the peak in gold and the run to $54 in silver. This ratio was actually trending down at the final last major peak in gold. But once everything pulled back, this ratio stabilized, and it did not test the low of the week as gold and silver did. And it was actually up on Friday when gold and silver had the double top and gold pulled back too. 2% pullback, 4% pullback. Well, the GX gold ratio was actually up. That is a strong confirmation that this is a consolidation period instead of a major top. What do you do in consolidations? I hold what I own. Some people add on. You add on if you don't have a big enough position that you want. It's somewhere during the consolidation period, or you wait for it to end if you're a very short-term trader that wants to buy breakouts. So everything looks in order here for gold and silver to go sideways and then have another big move at some point starting next year, probably towards the end of the first quarter. Well, if you like this kind of information, hit like, hit the subscribe button on this YouTube channel. And if you're not yet on my newsletter, go to Wall Street Window and subscribe to get those morning updates completely free. And I'll be talking with you later.